As we ascend into 2024, the Zambian market confronts a landscape marred by challenges and opportunities. Here are key market and macroeconomic risks to look out for in the Southern African nation. Zambia's debt restructure conundrum. Africa's copper hotspot is in the labyrinth of a private debt restructure that has delayed following reservations expressed by both the Official Creditor Committee and the International Monetary Fund over comparability of treatment using the G20 Common Framework. This arose after Zambia reached a proposal in principle with the Bondholders Committee last November, which could have seen the reissuance of two bonds maturing 2035 and 2053 respectively under an economic base case scenario. Zambia's MinFin will now navigate to reach restructure consensus that will be deemed fair by both bilateral and private creditors. On the downside, the ongoing geoeconomic struggle between China and the US does reverberate in Zambia's debt restructure negotiations, posing implications for interest and foreign exchange rates. Delayed debt restructure will protract the foreign currency rating upgrade from the current default, with S&P, Fitch, and Moody's, which has been cited as a key driver for unfairly priced capital on the back of wider sovereign risk premiums. An upgrade will not only improve capital flows into Zambia, but will allow the Southern African nation to return to the international capital markets and have its assets relisted on the JP Morgan Bond Index. Currency risks and inflation. On the back of FX supply constraints, the Kwacha has extended its losing streak to date and is trading for 25.25 Kwacha, 26.15 in bid and offer, shaving 52% in value over the last 7 months. The red metal producer has grappled with lower mining output that has constrained FX supply, causing bottlenecks in meeting current demand. Other drivers of weakness include exogenous factors such as a strong dollar, environment, and global uncertainty, while endogenous tendencies range from demand for farming inputs such as fertilizer to petroleum products. In a notoriously currency depreciating environment, transfer and convertibility risks are prone to actualize. Tighter monetary policy through higher cash reserve ratios and a wider benchmark interest rate is expected to reign as the only sterilization measures to tame currency volatility pressures in the immediate term. Currency weakness continues to breed speculation and above all inflationary strains that potentially could keep the price of money higher in 2024 if not addressed. Zambia's December inflation rose to a new high of 13.1% and is expected to remain outside the Bank of Zambia target band of 6 to 8% until the first half of 2025. Given Zambia's appetite for imports, domestic supply chains remain weak as a consequence of imports of consumer goods. This has persistently pressured the exchange rate and ultimately impacted sustainable job creation as corporate entities grapple with higher operational costs. Environmental risks impacting power generation and agricultural output. Zambia faces environmental risks as climate change risks heighten. According to the Farmine Early Warning System Network's strong El Nino weather will drive high needs across Southern Africa through early 2025. The wave is focused to peak intensity in late 2023 and dissipate by mid-2024 and is expected to drive below average rainfall across much of Southern Africa. Exacerbation of drought risks has impacted precipitation patterns to fueling a plummet in dam levels at the largest man-made lake, the Kariba Dam, to below 12%, triggering decreased water allocation between both Zambia and Zimbabwe. This has constrained power generation and triggered load management for power rationing in mitigation. As the Zambian economy rebounds in growth, energy demand could strain the grid further from electricity needs stemming from a mining boom and a rising population. Erratic precipitation is also expected to adversely impact agricultural output, which could trigger irrigation mitigations for crops to hedge against food security risks. Zambia's gear shift in agricultural policy has catered for increased irrigation to mitigate the risks of drought in its 2024 budget. Technological disruption. The rise of disruptive business models in finance, such as integration between banks and mobile network operators in mobile money payments, does underscore the challenges posed by digitization, decentralization, and democratization. The advent of technology in a fintech era poses heightened cybersecurity risks that do necessitate increased investment in risk mitigation and monitoring tools that will help preserve confidence in payment platforms. The Great Chinese Transition and key mine shutdowns impact on the copper market. On the downside, China's transition to a service-oriented economy impacts global copper demand, affecting nations reliant on copper exports. China consumes 43% of global copper, and any shifts will affect demand and pricing, which could add fiscal balancing pressure on Dutch disease nations like Zambia and the Democratic Republic of Congo. In the interim, a copper rally is expected given the red metal deficit forecast in the medium term. Copper is anchored to Zambia and a major driver of FX supply. The upside is characterized by bullish views stemming from demand for green metals and hopes for further US rate cuts in 2024 on the premise that inflation globally will subside. The International Copper Study Group projects a 2.4% increase in copper usage in 2024. Copper supply concentration remains in 5 key mines globally, being Chile's Escondida, Spence and Quebradat, Blanca, Cobra Panama, and the Kamoa-Kakula in the Democratic Republic of Congo. The world could face a deficit as one of the largest mines was forced to shutter operations. Warnings of a squeeze come as the Panamanian government closed First Quantum Minerals' 10 billion Cobra Panama copper mine that did contribute 400,000 metric tons annually. Other key mines such as Anglo America slashed production focus by 200,000 metric tons in 2024 through to 2025. Zambia in 2023 put its house in order with resolution of the Vedanta ZCCM Investment Holdings impasse that will see resumption of production at Konkola copper mines and the remarkable conclusion of an equity partner for Mopani copper mines after Glencore Corporation's exit in a $1.1 billion book value deal that saw Abu Dhabi's IHS Resources assume 51% of the operation. Southern Africa's mining agenda is expected to take off in 2024 with renewed investments in exploration and a rekindle of earlier shutdown operations such as those at China Non-Ferrous operation at Luanshya Copper Mines Shaft 28, in addition to First Quantum Minerals' nickel project being the largest on the continent. Copper pricing is expected to remain bullish in the medium to long term, ranging between $11,500 to $15,000 a metric ton on the London Metal Exchange by 2025, a wave that most exporting nations seek to leverage off. Geopolitics of oil, inflationary stress. Continued elevation of transport and food costs fueled by rising crude prices as the OPEC Plus seek to support oil prices through further supply cuts. This is seen as a persistent threat in 2024, which, coupled with local currency quagmires, could see immense pressure on petroleum prices in Zambia. The transition to electric transport continues to incentivize the OPEC Plus to maintain elevated crude prices. Zambia remains a price taker of crude, which impacts private sector pulse as measured by the Purchasing Managers Index. In 2023, higher fuel prices, currency depreciation, and lack of liquidity were persistent themes in the Faculty of Business pulse. Global and domestic bond market volatility. Despite indications of developed nations' inflation battles subsiding, persistently high fuel and food prices coupled with a tight US labor market might deter investor interest in markets like Zambia. The bond market remains a function of global shifts in risk on and off posture. Heightened uncertainty as a consequence of the Israeli-Hamas, Russo-Ukraine, and the US-China trade wars continues to shape gold and US-denominated asset pricing, impacting emerging and frontier markets. On the domestic market, the Zambian Central Bank will in 2024 increase Treasury bill issuances size to 2.3 billion kwacha from 2 billion kwacha in the previous year, while bond size will decrease to 2 billion kwacha from 2.6 billion kwacha previously. This could flatten the government security curve faster on the shorter end, posing margin squeeze risk for financial institutions. However, this would be hampered by protracted debt restructure talks that have kept the kwacha demand curve elevated in the 20s. US elections, trade policy uncertainty. Global politics is another area that is focused to shape policy, especially in the area of trade. With the US election on the verge, this year the clash between globalist and nationalist ideologies do shape the US trade and economic policies, affecting trade relations with Africa. However, competition with China might moderate policies towards the electric vehicle mineral-rich nations like Zambia and the Democratic Republic of Congo. Infrastructure pronouncements historically have been known to provide support to base metal demand, such as that for copper. Despite these complexities, the rivalry between the East and the West offers leverage in trade and investment decisions. The East has been a big trade partner with emerging and frontier markets, which the US has awakened to this reality, especially in the era of green metals characterized by the electric car and renewable energy, as vast of those resources reside in these markets. Climate change, struggles in green finance. Despite Zambia's green bond support, global consensus on metrics for successful green initiatives remain elusive. A bond sell-off and global bond environment challenges hinder green bond demand. Despite significant strides in this faculty, the green finance is still in infancy in Zambia. As predicted by the AFMINDEX 2023 Financial Innovation actualized in Zambia with the issuance of a $200 million debut green bond by the Copperbelt Energy Corporation, whose first tranche was 178 times oversubscribed. The market is yet to see more issuances going forward, a testament of the recently issued green bonds listing rules. Navigating these challenges requires a data-driven approach and an astute understanding of the nuanced interplay between global geopolitical shifts and domestic economic dynamics. For financial markets, professionals, and investors, remaining vigilant and adaptable amidst these uncertainties is key to capitalizing on emerging opportunities and mitigating risks in Zambia's intricate market. Amidst these challenges, the Zambian economy is focused to expand between 4.7% and 5% in 2024.